There's too much going on, man. There's too much going on in the stock market right now. If you did not know, we are in absolute earnings mayhem right now. And let's put it this way. A lot of folks expected this afternoon was going to be a complete disaster, okay, based upon some of the companies that were reporting, all right? And I want to take you guys through the financial statements of these companies and show you exactly what's going on in detail with these companies' business models. So if you're thinking about recession, if you're thinking about business models being devastated with some of the most important companies in the world, you got to look at the financial statements and see what's actually going on with these companies, okay? And that's what we're going to take a look at. Google McDougal, Mr. Softy, two of the most important companies in the entire world reported earnings just a couple hours ago, and Visa as well. Here's the deal, okay? We're talking almost $4 trillion of market capitalization between those three companies right there. Absolutely insane, right? And so let's go through this, guys. Hope you enjoy this as always. Wow, okay? So first one up here is Mr. Softy. First thing up is product revenue is down for Mr. Softy about $1 billion. So not a good start there for Microsoft. Services and other came in at a very nice increase of over $6 billion. So that was nice. Now, the issue is a lot of folks on Wall Street, a lot of analysts and investors thought basically Azure, I can never pronounce it right, Azure, their cloud product, Microsoft's main cloud product, they thought the growth was going to be faster than it was. So it actually came in as a disappointment, but I would not call it a disaster, which remember, when we talk about the NASDAQ was down as of a couple weeks ago, at least a few weeks ago, the NASDAQ was down 30+%, right? When we talk about that sort of year, everybody's starting to prep for disastrous earnings. This is not a disaster here with Mr. Softy, okay? Total revenue increased very nicely year over year, $46 billion. They did in the same quarter last year. This year, $51.8 billion, right? As far as cost of revenue, very slight increase as far as the product goes. Services did increase quite a bit, but still, I would say that's pretty darn good in line with where you'd want to be. Total cost of revenue went up by about $2.5 billion roughly, but when you talk about, almost $6 billion of total revenue up, I'll take that any day of the week, okay? Gross margin came in at about $32 billion of gross margin, right? Versus about 35, or excuse me, last year at this time, $32 billion. Now they got $35.4 billion. Very nice increase there. Research and development did increase $1.2 billion year over year. But, Microsoft, they got to expend for the future, right? So that's what they'll say as far as that goes. But that's a pretty big increase. $1.2 billion is nothing to sneeze at. And that's just year over year, right? Sales and marketing, they increased at about $500 million year over year. General administrative went up about $200 million, just over $200 million there. Operating income was up about $1.5 billion year over year, so very nice. Last year, they basically had a $310 million kind of help out on a one-time thing. This year, a $47 million, kind of thing that hurt the business, just a one-off thing. So you can't really drive too much into that. And as far as provision for income taxes, that also hurt them this year, $3.7 billion there versus $2.9 billion, basically in the same quarter last year. So overall, net income hardly increased, but it did increase. And when you're kind of prepped for disastrous earnings, and you don't come in with a disastrous earnings and revenue still increases very nicely and you still find a way to grow your bottom line despite several things kind of working against you that are freak things, Wall Street's going to like that in the end, okay? And we also look at their balance sheet, $104 billion in cash and cash equivalents and short-term investments. So the balance sheet is still a beast at this company as well, right? And overall, Wall Street likes what they see. 4% up after hours there. Now, also keep this in mind. Remember, the stock was down almost $7 a share here today. So yeah, it's up $10 a share after hours, so it's a little better, but it's not like this is some sort of drastic move. This is almost like, I would call it a relief kind of rally after hours, because people are like, it's not a disaster at Microsoft. They're still growing revenues. They're still growing their business. They still found a way to grow the bottom line, even though it was a very tough quarter, right? And people feel, okay, that's a big one, right? So right off the bat, that's good. No disaster there, which everybody, like I said, right now in the market, everybody's expecting disasters, right? Google McDougal. What happened here? First off, very nice increase with revenues here. Revenues up about $8 billion roughly there. That's a very nice increase. Now, where the problem is look at the change in revenue growth year over year. 62% they grew revenues year over year last year versus the previous quarter, right? This year, 13%. So we're talking about a dramatic decrease. Now, that was coming off of a freakish kind of year, right, where obviously the previous year you were in Rona, right, those Rona quarters they were comping against. So it was a kind of a freakish situation. That's why it made their growth look so insane last year. But still, when you go from 62% growth to 13%, people still look and they're like, what happened to the growth here, right? On a constant currency basis, 57%. The previous year, then they only grew 16% here. But the bottom line is this is still not a disaster. They're still growing their business, right? Operating income, on the other hand, hardly increased despite that major increase in revenues. That's not good. Operating margin fell from 31% to 28%. That's not good. Other income and expenses, basically, this year they had working against them this $439 million expense. They had a $2.6 billion gain in the previous year in the same quarter. So net income ultimately did drop, but part of it, do remember, a big part of it is because this one-time off expenses and gains there. Okay, so if it wasn't for that, basically net income would have likely slightly grew. So do keep that in mind. EPS would have likely slightly grew and net income would have slightly grew. But we're talking about very slight gains. And when you're talking about, revenue up almost $8 billion, I mean, it's not good, okay? But it's not a disaster, and that's the important part. It's like, meh, that type of situation, okay? If we look a little deeper here, Google search and other, nice increase of over $4 billion there. If you look at YouTube ads, not very impressive. Not very impressive at all. YouTube ads were only up about $300 million. So growth, cool, good, but that's not that impressive. But it still gets a green because it's growth. And when the expectations are disaster and you come in with growth, and growth is growth, right? Google Network increased very nice here, about $700 million overall. Google Cloud was up very nice, $4.6 billion this same quarter last year versus $6.2 billion. So it's great, right? Number of employees, they increased 30,000 employees versus the same quarter last year, okay? Here's the deal. There's no way they could justify adding 30,000 employees over the past 12 months. No way. The only reason they did that is because, one, they had this ridiculous growth rate at this time last year, right? The other part of that is there's been like a battle in Silicon Valley for the top engineers and, everybody that's in that whole development space. And so therefore, all these guys been battling, Meta, Google, Apple, Amazon, all of them been battling back and forth, right? Plus you had all the VC companies out there you're competing with. Well, those days are ending, and they're ending actually pretty darn quickly, right? And so Google's in this situation where I feel like Google could probably go years without adding any more new employees to that company, like literally years. But they if you look at their employee growth over the past 5 years, it's off the charts. And it's not like their business got so much more complicated in the last 3 years, 5 years, that they're like, oh yeah, we need to add an extra 100,000 employees. But that's basically what they've done, right, at that company, because it's been a kind of a war between them and everybody else. And it's like, if you let the top engineers go to some other company, maybe they come out with some product that knocks you off, right? And so it's almost like you're almost like stockpiling, okay? It's almost like, I call it a little war that's been going on in Silicon Valley for workers, but that's all ending. So ultimately, at the end of the day, I think Google could either do layoffs, honestly. I don't think they want to go that route because I don't think they ever want to be the company that's doing layoffs, but I think they could definitely scale way back on hiring, which should keep their costs somewhat in line. And so if they continue to increase revenues over the next few years, I think a lot more of that money is going to hit bottom line than in these, let's just call it over the past few years, as they were adding just crazy amounts of employees, right? Now, if we look at the balance sheet, I gave it a yellow line here because it's still a crazy number, but it is down $15 billion versus December 31st of 2021. They had $139 billion of cash equivalents, and marketable securities. That's down to $124 billion, which is still just a ridiculous amount. But it's a $15 billion difference roughly there, okay? So overall, as far as how Wall Street's taking this, it's a positive. Stock's up over $5 after hours. It's up 4.8%. Do keep in mind the stock was down $2.77 in the regular trading day here today, so it's getting those gains back and adding a little bit more, but nothing crazy. And that's another one of those that, relief rally. Google's earnings, not a disaster. Woo, okay? And this is also moving other stocks. For instance, Meta. Look at Meta. Meta's up 2.6% after hours. Now, we do know Meta's earnings are coming out in about 16 hours from now. So that's obviously going to matter in a significant way, much more than Google's earnings. Meta's earnings are going to matter more for the company than Google's, but it's a good positive direction, at least, that Google's numbers weren't a disaster. So it likely means Meta numbers won't be a disaster because those two companies kind of move a little in line with their numbers. It's not like Snap. People try to say, oh, Snap numbers, were a disaster, so therefore Google numbers are going to be disaster in Meta. Doesn't mean that. Meta and Google are two different animals than Snapchat. Don't put those companies in the same sentence. That's just completely disrespectful to what those companies have accomplished and what those companies do versus a company like Snapchat. So, yeah, but that's the way a lot of people sometimes approach it. They think, oh, this company's doing this company's doing bad, or this company's doing good, so it means these other companies are. No, each company's its own individual, and they're going to perform accordingly. Visa, very important if you want to know how the economy's doing, right? Who doesn't use a Visa card of some kind, debit card, credit card, whatever. Visa, net revenues, 19% up year over year. GAAP, net income, generally accepted accounting principles, up 32% year over year. GAAP, earnings per share, up 36%. This is some of the strongest growth as far as GAAP earnings I've seen from just about any public company. Non-GAAP, net income, up 29%. Non-GAAP earnings per share, up 33%. Boom, 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 okay? Knocked out of the ballpark for Visa. Good for them and good for all of Visa shareholders. Absolutely amazing numbers. Payments volume was up 12%. Cross-border volume excluding intra-Europe up 48%. Cross-border volume total up 40%. Processed transactions up 16%. Boom, 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 boom. Great numbers, Visa. Give it up for yourself, okay? That's absolutely amazing. Now, a little worrisome for the overall economy here, okay? So this basically kind of shows you payments volume over time, okay, and over the last year plus. And what we see is payments volume okay, but we could potentially be in a down cycle here, okay? And you can kind of see it in the numbers here. And as these charts kind of move along, obviously, when the stimulus was out there, holy smokes, man, payment volume went up in a significant way, as you would expect if you pumped the economy with stimulus, right? But as far as growth rates go, not the most exciting over the last, let's just call it several months, to be quite honest. So, this kind of plays into this whole, are we going into a recession? And when you look at something like this, it's like, it's not clear. It's not a clear indicator of if this was falling off a cliff, I'd be like, yes, for sure. Look at the numbers. So we're kind of in this, in between time, I would call it that. And the other thing you got to remember about this, and I think that a lot of people don't think of this, right, is everything's much more expensive. So, there could be more being charged on cards, debit cards, credit cards, but is it because necessarily people are going out there and wanting to spend more, or is it because the gas station, they now are spending $100 versus they used to spend $60? Is now when you go to the grocery store, are you spending $120 each week instead of $110 or $100 like you might have spent at this time last year? So those are very important things to remember, and that's what I've also been thinking about in regards to, because Amex had great earnings as well, American Express. And I'm looking at these Visa numbers, and they're incredible. But I'm also thinking, are people charging more because they want to charge more, or because, as far as the dollar amount goes, or is it because they have to spend more because things are just much more expensive? And so these are just the things to keep in mind and to pay attention to in the stock market that I think are honestly very, very important. But there's no clear indicator based upon looking at kind of payment volume coming through that we're for sure in a recession or going into recession here or not. I think it's very, I would call it, indecisive number as far as that goes. As far as Wall Street, they don't know what to do with this stock. It's break even after hours, which in this sort of market, you'll take break even, right? You'll take break even. If the stock's down 2-3%. It is what it is. Do remember though, Visa and all these guys, Amex and all these guys, they usually trade at richer PE ratios in the market's trading at, and usually considerably. But also remember, they report these incredible numbers. I mean, Visa just reported, that's other than Tesla, I would say this is the most impressive quarterly numbers I've seen so far this earnings season is from Visa here. Everything Tesla had working against it, and for it to still put up the numbers it did was outstanding and amazing. Outside of Tesla Maestro, I think this is the best earnings I've seen so far this earnings season. And obviously, we still got several weeks of earnings season left, but definitely a step in the right direction. Now, that leads us obviously into tomorrow. Before the bell, you got Shopify, you got Boeing, you got Spotify, you got Waste Management, you have Sherwin-Williams, T-Mobile all reporting before the bell, and then after the bell, you got Meta. That's the one everybody's got their eye on. Then after that, Ford, Qualcomm, and all these other guys, right? Etsy's a beaten down dog stock that had really nice growth. What's going on there? Would love to hear that as well. But obviously, all eyes will be on Meta. Shopify already had a massive move down, so to get this stock to move down even more, their earnings is going to have to be a super big disaster. That's what I would call that. And if you don't get that super big disaster, the stock will actually move up tomorrow. So, I mean, if I was to put odds on if Shopify is going to go up or down tomorrow during the trading day, I would put it at about 75% up and about 25% down. The 25% is if they really come in with such a big disaster that's like, oh my gosh, everything's even worse than we expected, like way worse. That's where they have to come in after your stock was already down 14-15% today. Hope you guys enjoyed this video. As always, man, we got a lot going on. If you're looking to join us in the private stock group, learn how to value stocks so you know if it's undervalued, overvalued, or fairly valued. If you want to learn how to understand financial statements like a CPA would, if you want to get access to the Dividend Investing Mastery course, become a master of the stock market, and Thriving in a Recession courses, which I'm actually going to add a new video to that tonight. I'm pretty excited. And if you want to get access to the private Discord chat and know the moves I'm making in the market, go ahead and fill out an application. That will be pinned comment down there, and we'll see if we can get you in the private stock group. Much love as always, and have a great day.